Very good morning. Crude just crashed 13%. Brent from $110 to $94 overnight. Gift Nifty is up almost 700 points and FIS sitting on 2,59,000 short contracts. The ceasefire just lit the fuse. This is India's pre-market edge delivered every single morning. I am Tanmay Kurtukoti, Season 2, Episode 15. Let's go. Overnight, President Trump announced a 2-week ceasefire with Iran. Pakistan mediated, and that's a joke. The condition: Iran opens the Strait of Hormuz immediately, and markets reacted and exploded. Brent crude crashed 13.28% to $94. WTI down 15% to $96. This is the biggest single session crude drop since the 2020 Saudi price war. Also, gold rallied to 48.17, that's up by 2.33%. The dollar index crashed below 99, sitting at 98.91, down almost 77 bips. So dollar weakness you haven't seen in months. USD INR below that 93 mark, 92.98. Asia is on fire. Nikkei is up by 5.39%, KOSPI is up by 6%, Hang Seng is up by 3.2%, Taiwan is up by 4%, Dow Futures 2.23%, and Gift Nifty 23,808. Yes, 23,808, up by almost 700 points plus 2.9%. That's a 685 points above yesterday's Nifty close of 23,123. Europe closed before the ceasefire. FTSE was down, DAX was down. When they open today, expect a monster gap up there too. But here's the question: is this the end of crude super cycle or just a 2-week pause? We have to answer. Now the positioning data from yesterday's expiry. This is where the story gets really interesting. Pro traders, are leading indicators, added 9459 long contracts in futures. Pro is now net long 24,000 contracts. They also bought 24,591 puts as hedge. Classic long but protected positioning. Pro was getting ready for exactly this kind of move. FI just covered 9,000 contracts on expiry day, from minus 2,68,000 to minus 2,59,000. That's their position. That's a 3.4% of their position that was reduced yesterday, on a day when Nifty rallied 435 points intraday and closed at 23,123. But here's the subtle shift nobody is talking about. FIS also reduced their call shorts, the bearish option bets, by 25,919 contracts, and they bought 10,000 more puts. What does that mean? They are restructuring, moving from aggressively short to hedge short. That's the step before covering. They were preparing for the possibility that they are wrong. Now today, with Gift Nifty up by 670 points, those 2,59,000 short contracts are staring at a massive mark-to-market losses. The pressure to cover just multiplied overnight. The crowd added 36,000 more short puts yesterday. So net short puts now at minus 3,98,000. That's almost 4 lakh contracts they have shorted. They were betting on more downside at the exact moment a ceasefire was about to collapse crude 13%. The crowd was on the wrong side again. Yesterday's Nifty close was 23,123. We blew past the old 23,200 call wall. VIX closed at 24.14, down from 25.5. Classic IV crush on expiry, but that was before the ceasefire. With Gift Nifty trading at 23,800, we are opening roughly 700 points above yesterday's close. The old 7th expiry chain is gone. The new chain 17th expiry is still building. OI is thin. That means resistance, less spinning, bigger directional moves are all possible. So 24,000 is the biggest psychological resistance. Below 23,500 is the first support. Yesterday's breakout zone becomes the floor now. So key point: don't chase the gap. Let the first 30 minutes settle in. The opening auction on a 700 point rally will be messy. Institutions rebalancing, market makers re-hedging. Let the noise pass, then look for direction. Use yesterday's screener data. It closes at market close and won't update until today. So the broad signal was already turning bullish before the ceasefire. Signal was on the buy side 22,607, where we went long, and we closed above 23,123. Sectors: energy stocks will get the hit. Crude at $94 hurts upstream names, but it is a massive tailwind for everything else. Airlines, paints, chemicals, auto, anything that uses oil as an input just got the margin expansion gift. Banks benefit from rate cut expectations. IT benefit from the weak dollar boosting export competitiveness. The RupeeCase Nifty portfolio currently holds ONGC, Coal India and other commodity names. Mixed today, but the broader portfolio benefits from macro tailwind. Next rebalance is in the next week. Track it live on rupeecase.com. So why does crude crash matter so much for India? Here's the math. India imports about 85% of its oil. Every $10 drop in crude oil saves roughly 43,000 crore rupees annually on the import bill. That That's not just a number, it's directly reduces inflation, and lower inflation gives RBI more room to cut rates. Which brings me to the second domino, RBI MPC policy decision at 10 a.m. today. With crude crashing 13%, the inflation headwind that was keeping RBI cautious just evaporated overnight. If they cut 25 bips today and the shift to an accommodative stance, this market squeeze higher and 24,000 is in play. Quick prediction check from yesterday. I mapped 5 scenarios for expiry. The market tested 3 of them. Below 22,950, negative gamma accelerated to 22,719. Then a V-shaped rally happened. Closed at 23,123, hit the squeeze scenario, and above 23,100, that's where the prediction hit. The data work. My read, we are long options, long volatility. Directional bias is also long. IV crushed yesterday on expiry, but the 700 point gap up and fresh momentum, IV should rebound. This is a long gamma in action. You want to own options here, not sell them. Wait for first 30 minutes, then probably go on buy on dips, that is go long. If you are reacting to ceasefire headline right now, you are already late. The data told you pro was getting long 2 days ago. The data doesn't lie, narratives do. That's your edge for today. If this added value, share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, or stream it live on RupeeCase.com. I'm building RupeeCase, India's first systematic investing terminal. Link is in the show notes. You just got earlier. See you all tomorrow.